So to start with, Jesse, we'll be looking at tabular analysis. Like I said, we are not going to look at this question. You are free to look at it after I show you the principles. So if you find such a question in the exam, especially that you are going to go through the principles with me, you should celebrate because you will get everything. So those that are saying, no, revision, what, I've said, no, I'm not going to reduce myself to look at these questions. But indirectly, those that know what we do at the academy, they know that if whatever example I'll come up with, I'll mirror whatever question is in the exam, or those things that you write in the exams, and I'll mirror it and put it in my own ways so that it becomes easier for you to understand. So I thought that because most of the time she brings these questions on tabular, whatever, but for people who may not have an understanding in double entry, Tamara, how good are you in accounting? Like from the basics?
My double entry is okay.
Oh, okay, that's very good. So forget about these things. Once we look at my examples, my principles, you are free to go into and look at their question. You can still send whatever you have done from your exams. You can pick any question from your exam papers. I'm not going to pick any. You can pick any question, you look at it. If you have problems, you can call me, then I know that you're a serious student. So we then now go to the website. I guess you saw these questions. For those that have put notifications on their phones, when I post something, you should be able to see.
Yes, good.
So we'll start with the first one, but I have to introduce the principles of double entry, at least even just for about 5 minutes. It's very, very important. I'll unpin this so that I speak to you and with you. For accountants, double entry is as important as demand and supply is to the economists. Whatever transactions you see, any business transactions that you witness or you participate in, they'll have two legs. These legs, one is called the debit, the other one is called the credit. They normally say that debit the receiver and credit the giver. So an account that is receiving will be debited. The account that is giving will be credited. Even in financial modeling, especially if you are given, for example, to model a renewable financial model, say for 25 years or so, if you have an understanding of double entry, you will not have huge problems when one asks you and says, suppose we put this particular variable in the model, what would be the effect? So double entry is as important as demand and supply is to the economists. But then we have to start with a basic, what we call accounting equation before we go to the business equation. An accounting equation, Tamara, what is an accounting equation? Give me the accounting equation, not the business equation. Tamara, I'm waiting.
I don't know which one, coach.
You know double entry. That's what you told me. Eh?
Which equation?
Eh? Give me the
Which
accounting
equation?
equation. Give me an accounting equation. Wilbrod, how are you?
I'm good, coach. How are you?
I'm okay. How is Kasama?
So. It's okay.
Okay, thank you. Jesse, can you give me the accounting equation? This is the accounting equation, guys. Assets equals capital plus liabilities.
Oh,
That's just an accounting question, and that's where you have to start from. For example, if I say Tamara started a business with 10,000 kwacha cash. Cash is an asset. An asset is anything of value. Anything of value is an asset. An asset, for that which has value to qualify as an asset, there are about three things that you have to look at. One, you should be able to measure the cost reliably. Secondly, is that there should be probable economic benefits that will flow to you, because anything of value, it should give you some benefits and economic benefits for that matter. Thirdly, it should have an economic lifespan. Obviously, one would argue that land is not depreciated. But this is where the concept of going concern comes in. So you need to understand the accounting equation. When you say Tamara invested the 10,000 kwacha cash in her own business, cash being an asset will be debited because it has received. The cash account has received. Whereas capital, because this money has been borrowed from the owner of the company, who in this case is Tamara. There's a basic principle in accounting, which is somehow different from legal, that the owner of the business and the business are two different people. So if you get a 10,000 kwacha from your own bank account, you bring it into your business. In short, you have credited the capital account. So the business owes you capital, owes you money for that capital you have put in. This is why it comes in as a credit. But when you, as the owner of the company, Jesse, decides at any given point, decides to draw or withdraw a certain component of cash of your capital, it is not going to be regarded as an expense. No, it will only reduce your owner's equity. So there will be 10,000 kwacha cash as an asset, but there's also to be credited as 10,000 under the owner's equity, which is capital. So at any given time, it should balance. So this is, let me just get the thing, the whiteboard. So the accounting equation, do not confuse the accounting equation with the business equation. So it's assets equals to capital, which is owner's equity, plus liability, meaning that you could have borrowed from Jesse. Other than using your money, you have borrowed also from Jesse, a 2,000 plus your 10,000 that you have. So that 10,000 example I was giving you, that will be here as 10,000, which will be cash. And maybe Jesse has also given you a 2,000, which will also be cash, giving you a 12,000. Then here you have a 10,000 that you invested into this business as the owner of the business, plus the liability of 2,000. Giving you 12,000. So at any given time, it should balance. It is called an accounting equation.
Mm-hmm.
So that's an accounting equation, meaning that when you are just starting business, you haven't gone to what you call commercial operation. You haven't started operating. You have just you have set up your business, but there's no commercial activities whatsoever. So the day you start your business, you invest into that business, the accounting equation will be born. Then when now you start selling, you start transacting and all that, there will be another baby that will be born. And that is called the business equation. Please understand these principles. So the business equation is just an extension of the accounting equation. So now you go to the business equation. So at this stage, you have started. Business doesn't look, there must be an S here, and it's okay. So business equation. At that point, Jesse, Mwayamba business, you have started the business. You have started selling. You have started withdrawing from your bank account and all that and all that. So now it is improved on. It's just an addition or an extension, not really an addition, an extension of the accounting equation. So to be assets equals to capital or equity plus liabilities minus drawings. If you are drawing your owner's money or the owner's money, if it's being drawn, then plus profits. If you're making profits, here I'm assuming that you're making profits. But these profits, guys, whether it's a loss or it's a profit, it's actually a product of revenue and expenses. It's a product of revenue and expenses. And as per definition, Profit is excess income over expenditure, whereas a loss is the opposite, which is excess expenditure over income. Now, when you go to this tabular analysis, though accountants, they don't do tabular analysis, they do the double entry, and they are able to see where these elements or transactions have been posted to. Obviously, go to the general ledger, but you will know that is it a debit, is it a credit? And if you make an error, this is where now you are supposed to come up with a journal. You prepare a journal and post it in the system to correct those errors. So the tabular thing, if you can follow this, formula that I'm going to give you here, it is still an accounting, it's a business equation, but on tabular. Now when you're doing your tabular analysis, what you call tabular analysis, this is what is going to happen. You will have assets this side. Equals to owner's equity, which is capital. I'm just quite capital, but just know that it's owner's equity. Capital plus liabilities. Here you have different types of liabilities. But when you're doing this tabular analysis, there's no need to start segmenting them. Capital plus liabilities, minus drawings if you want to remove part of your money. Plus revenue, please do not forget that. Because revenue has a credit, an increase in revenue will have a credit balance. So anything that is below assets, equity, and the liabilities, they will have a negative, a credit balance. So you're adding revenue. Then less expenses. Please just write this. It will help you to get that 20 marks easily. These two, like I said, that is what we are calling as profits. Tamara, is it okay?
Yes, coach, I'm following.
Vupe, thank you so much. You haven't missed a lot. You haven't missed. Thank you for attending this webinar, this workshop. Like I said, it's optional, so we don't force anyone to come here. So now, this is what you're going to do, guys. So let me go back to your things. Like I said, Tamara, your lecturer, she normally brings, she's so restricted in the things that she brings in your exam. She's very restricted. So she would bring a question like this. If you don't know, uzazima, you will not do anything at all. But this, oh, where have I gone to? Oh my God. I don't know if it was up or down. I don't know. Okay, see here. So if you know, once you see this question, start with this before you go to those things that will waste your time. Because this thing, you're not going to waste your time. And you get everything. Then you can even relax. But I'll leave this question like I promised that I'm not going to do your lecturer's questions, because she has she has done videos, as I was told in the morning, and those videos you will be able to watch how she does these things. So we go to my examples. But once you do that, just like I said, I'm as open as I don't know. I'm very open. So you can just tell me, I've done this, Coach Carter. Can you review my work? I will review that, because they know at that point you are learning. But going into these equations, it's not learning. You first have to understand the principles. So we go to my website, or to the Roy Concert website. This is where we have these two questions. If you can do these two questions, then you're home and dry. The first example, that's what we are going to start with as a basic. So you can get a screenshot and just capture that, so that when I go to Excel, you will be telling me what is in there. It reads, transactions made by Rovind and Sons for the month of November. The following transactions were made. The company sold goods at 30,000 kwacha on credit. The company, so if it sold goods on credit, you know that revenue is going to go the other side there, and equity and liabilities. Also, you know that there's trade payables that will sit in there. So let me just read the question, then we start interpreting, just to give you an understanding. The company received 12,000 in cash from customers who had been billed for services in transaction 1. The company had recently been featured on a paid-up interview on ZNBC and charged 1,400, but will not pay it until later date. 4. Luvinda withdrew 700 kwacha cash from the business for personal use. Required to prepare a tabular analysis of the above transactions. Okay, I hope you got a screenshot. So we can go to Excel. Please, I want you, especially this question, put it in the bag and make sure that if she brings, like she does most of the time, go for it. You'll spend less than 20 minutes or 30 minutes. You'll save time to start looking at other things which you are prepared to fail. It's okay, because you would have gotten your 20 marks. So let's start, guys. So what I'm going to put, first I'm going to put a business equation, because that is what will guide us. This is what is going to happen, guys. We'll have assets on top. So it will be assets equals, we'll start with owner's equity, which is capital. So owner's equity plus, this is what you put. These will be columns. What you are seeing there, they are columns. So you put it as a header, as headers. Owner's equity plus liabilities plus liabilities minus owner's drawings which is the money that the owner is withdrawing from the business. It's not an expense. It's part of your equity reduction. It reduces capital. Owner's drawings. I hope you are doing this. At least for this one, assure me that you'll get everything. Yes, there is no modeling involved. It's double entry.
Okay, 21 out of 20. Bagged.
That's how it should be. So you will pack it. You will look at those questions that she asked. Then if you have any challenges, you can call me. You can go on WhatsApp just to give me a thing so that I guide you until you get it right. It's basic. Then minus or honors drawings. This is where, because this is a business equation, this is where we say plus profit. But we are saying profit, we are segmenting it into two, isn't it? So we are saying we are actually bringing in what? We are bringing in first, what is this? Revenue. Then minus what? Expenses. So make sure that drawings and expenses, even the numbers down there, they will be negatives. So this is what we'll do. You get a Karura nicely. It just reminds you, it just takes you to. So honors equity. You do it very smart. I know liabilities. Let me add another thing because there could be many. I'll do like this. Then honors drawings. I'll also just want you to appreciate what is required here. Okay. So now we start the transactions. What was the first one? Okay, I didn't written the question here. So the company sold goods at 30,000 kwacha on credit. So we know that if it's on credit, there will be receivables, which is trade receivables. So here we can show first cash, depending what is there. Then we can show trade receivables. I'll be explaining these terms, Wupe, but then you're a banker, you'll be explaining to me. Sumamen. Wupe.
Yes, coach.
So.
No, you're teaching, coach.
No. You are the guru. Yeah? You are the guru. So. What have I done? Stubborn. Okay. So under assets. Oh, let me put here. So here, guys, we are told what two elements actually got affected. The company sold goods at third quarter on credit. So we know that it was on credit. Revenue first. Revenue, there was how much? 30,000 kwacha. This is what you do. It's just double entry. Not here, sorry. Here, 30,000 kwacha. So there's a revenue. This is what you're adding, 30,000 kwacha. Which other element was actually affected? But it wasn't cash. It was sold on credit. So if it was sold on credit, you have receivables. So receivables will also be here. It will give you 30. So here, what it is, Tamara, whatever transaction you have, it will have two legs, the credit and the debit. But here you are not showing the credit and debit, you are just showing them as is. Trade receivables from your operating activities, the goods that you sell to people and on credit. So those that owe you are what is referred as receivables.
Yes, coach Nikonga.
Vana Edivani. Mwamvela.
Nikuchita ni mute kuli chongo ku background,
Okay.
but Nikonga.
So that's the first one. So this side here, obviously, what you're seeing there is revenues and doesn't change. There's only one type of revenues. That's why I'm not minding not having it there. It's okay. But if you want, you can still write here as revenue, but still the same thing. Then we go to number 2. Number 2 says the company received 12,000 in cash from customers who had been billed for services in transaction 1. So tell me which ones will be affected here. Guys, you have received. This was transaction 1. I'll call it T1. You could even put the descriptions here, the dates and whatever, but I'm just calling it at T1. Then we'll have T2, transaction T2. What are we told? We are told there's cash that was received. So you type 30,000 like this, 30,000 cash. But this cash, which was from what? From sales, which will be, was it 30,000? Sorry. Yeah.
Let me just check.
The company received 12,000. It was 12,000.
Yes.
So 12,000 cash yangena. But this 12,000 is coming from revenue, from sales, like this. Jess, is it okay?
Yes, coach.
After this, once we are done with the 2 examples, Jess, don't sleep. Look at that question of yours from your thing, from your exams. Do it. Give me at least let me know how you're going to perform, because I want you at least for the 20 marks. If you have a problem with the data validation and other things, okay, you can ignore them for now, but at least get the 20 marks from this.
Yes, coach.
Transaction 3. The company had recently been featured on a paid app interview on ZNBC and charged 1,400, but will not pay it until later date. What is this? This is an expense. So expenses are debited. But in using this expanded thing, we know that the expenses will come and sit here. How much is it again, Tamara? How much is it? Is it 1,400?
Yes.
Jesse, Whoopi, let's be active, huh?
1,400, coach.
So we are saying that because it's an expense, you type it like this in negative, always put it in negative there. Then come this side, we are actually told this is an expense, but it's a liability. It will fall under trade payables. Remember that this guy is it wasn't paid, isn't it, Tamara? It wasn't paid. No. So under liabilities, this portion under liabilities, we are putting trade payables. So trade payables will come and sit here, minus, so that we have a positive one. So if you are seeing what I'm doing, at any given time, whatever transaction that you have, Whoopi, will give rise to 2 legs, a credit and a debit. This is why you people that are working and those that you plan to work at the Royal Consult like Tamara, please do not steal and shatter one record like a lot of people do. There is double entry. They say whatever you do, there is another set of record which you have no control, which is either it's a debit or it's a credit. There will be no transaction that will only have one leg. It is not possible. What have I put here? This should have been transaction number. Oh, made a mistake. Okay. Then T4, transaction 4. So transaction 4, guys, it says Luvinda withdrew 700 cash from, from the business for personal use. Drawings, it is not an expense because when you started a business, you contributed, you gave that business whatever amount of money that was given in terms of equity. So when you try to get part of that money, it is not an expense. You're just reducing your equity. And this is why this business equation is in the manner that it is. So if you withdraw, how much was it? Sorry, 700. Here, the 700 will go. But this side, the drawings as well, it will be in a negative. So you have something like this. Having that, you can now get the totals, and that is it. So that's it. Here, this was so basic. All I needed you to do was to do a tabular analysis. That's it. This is example number 1. And not just always troubles me with these workbooks. So I have to make sure. So now we go to example number 2, which now becomes a bit not complicated, but you have so many things. So if you go to the, I know I have the question the other side. I just want to show you that it's here. Any questions before we move to example 2, which has a bit of meat? No questions, huh? Thank you. Example 2, Tamara opened a consultant's firm in Botswana after copying what we do at the academy. Tamara opened a consultant's firm in Botswana on 1st October 2020. The balance sheet showed cash 7,100 kwacha, accounts receivable 2,400, supplies 700 kwacha, equipment 5,500, accounts payable 5,500. What did I smoke? And owners equity, I'll try to change. And owners equity 7,700. That's owners equity or update it properly. I don't know what I was thinking. I hope that is not what I did here. Okay, so it's owners equity. I'll leave the numbers as is, it's okay. So during November, the following transactions were occurred. So meaning that on the last day of October, 31st October, these were the balances brought down. These were the balances that were coming from October. So during November, the following transactions occurred. One collected I smoked something from Eastern provinces, so. You see me, at least I'm able to agree about my errors. Hey, Tamara.
Yes, coach.
And for that, Chingoni.
Yeah.
James. Because now my confusion now on a pack. Okay, so I'll correct this, but let's say it's 1,125. Just ignore the zero on the other side. I'll remove this zero. I'll correct whatever's in here. So corrected 1,100 and what if I forget, then it will be a problem. Owners equity. Collected 1,125 of accounts receivable, paid 3,500 cash on accounts payable, recognized revenue of 8,200, of which 4,100 is collected in cash and the balance is due in September. Purchased additional equipment for 1,800. For 1,800, paying 500 kwacha cash, paying 500 kwacha in cash and the balance on account. Paid salaries 1,650, rent for November. Rent for November 720 and advertising expenses 450. So we can say paid salaries 1,650, rent 720, and advertising expenses 450 in or for November, not in, for November. Withdrew 1,400 in cash for personal use. I hope we don't find ourselves in a situation where you're withdrawing more than what you have in the account. So that would be a problem if we find ourselves in that. Let me just check. This becomes for about 5. Okay, 6. It's okay. Received 3,170 from Zanaco Bank. Money borrowed on a note payable. I'll explain what a note is. Incurred utility expenses for month on account 450 kwacha. Prepare a tabular analysis of the November transactions, beginning with the 1st October balances. The column headings should be as follows. Cash plus accounts receivable, which is trade receivables, plus supplies, plus equipment. This whole part, Jesse, is assets, equals notes payable, plus accounts payable. You should know the difference between these, and I'll explain them in a moment. Plus owner's capital, minus owner's drawings, plus revenues, minus expenses. This is what you call the business equation. Prepare an income statement, an owner's equity statement, a balance sheet, and a cash flow statement for November. All these, they will be explained. I can now update. Okay, so now we can go to Excel. Okay. So I had already put this because I didn't want to waste your time. And the assets, according to what we are given, there's cash, accounts receivable, liabilities, we have accounts payable. There's something that is missing here. There's something missing. There's the note, yeah?
Coach, sorry to take you back.
So I'll just increase. Hello?
Excuse me, Coach. Sorry to take you back. Can I just have a look at the one we had done before?
Okay. So you put main headers on top. So under assets, what are the segments that will sit under assets? Depending on the question. If there are equipments, you put equipments, but the first one, there were no equipments. Under owner's equity, okay. What will be there? If there's anything, you put it there. Right?
No, okay. Okay, Coach.
Okay. So under this, we'll have the accounts there. I'll do like that. When you're doing the tabular thing, don't forget to put this to my plus plus. But you have problems. If you just type plus or equals and you think she's a 7, it will not work. You'll have problems. If you type like this plus, make sure that you don't put things the other side. If you type like this, make sure you just leave it like that. Don't put anything in there. So you have that plus. Then we are saying we had what we are calling as payable, not what? I want to get it as is. Not payable. Okay. So we have the owner's equity. So under owner's equity, this is where everything sits. So we can now start, guys. So transaction number 1, what is there? T1, T2. I guess they're going up to 8. So the first one, and we'll do it quickly, collected cash, collected 1,125 of accounts receivable. So there's cash that was collected. There was cash of 1,125. Oh, sorry, you have seen now. We have the opening balance. Remember the opening balance, Tamara? Do you?
Yes. Open Opening balance of 7
That's cash.
Yes, coach.
Okay, 7,100. Accounts receivable.
2,400.
2,400. Accounts payable.
5,500. 5,500.
5,500. Not payable. Was there anything? If there was nothing, there was nothing.
Supplies.
Very better. Honors
Honors
capital.
equity.
Honors equity.
7,700.
7,000. 7,000.
700.
Honors drawings. Oh, obviously there's nothing. It can't be in balance. Why am I getting this stupid? Revenues. Obviously, these you can't have because you can't have an opening balance or revenues or expenses. You have saying I don't know what.
But there was supplies. Where does supplies fall?
It supplies is under assets. Sorry. Let me do this.
And equipment.
Okay. And equipment. So we are saying you have supplies. Then you have equipment. So equipment is how supplies was how much? There was nothing.
Supplies was 700.
700. Equipment.
5,500.
Okay. These were the balances that we had. Okay, but you have to make sure that they balance. They have to balance. You know, when you have this, sorry, we'll have to correct the question. There it's giving you 15,700. Just write it somewhere 15,700. Then, because I made a mistake on this payable, 13,200. So 15,700 minus 15,700 minus 13,200. How much is it?
15,700 minus 13,200. 25.
So accounts payable would go to 8,000. So that when you add this, it gives you 15,700. When you come this side, it gives you 15,700. So here, this is where I made a mistake on accounts payable. It's supposed to be accounts payable is accounts payable, where we had 5,500 on top.
On top.
So it's supposed to be, we said 8 P9, 8,000.
Yes,
Otherwise, it's not going to balance as a katseka. And just correct this as well. Just a bit. Okay. This thing now has been corrected. We can go to the tabular one. We are saying there's 8,000, equipment was 55. There was no note payable, isn't it? Okay, so now we start with the transaction number 1. This is why it gets interesting. So we are told collected 1,125 of accounts receivable. What it means there, Jesse, is that though the person that was owing you after you sold the chickens has brought the money. So what happens if this person really has brought the money? 1,000 how much? 1,125. So you type it nicely also. So you type nicely here under cash, which is at how much? 1,125, isn't it?
Yes.
Mm-hmm. 1,125. But then, meaning that that one Congole, you strike her out from the book, isn't it?
Yes, because Valipia.
Alipira. Just understand these principles.
Coach.
I understand it's not Kuzuwa Chabenfuti. Understand these principles.
Better coach.
So then we go to the other component. Guys, this one has been done. I can even put it in here. Then at paid 3,500 cash on accounts payable. Here they owed accounts payable. These are suppliers. They are trade creditors. This is where you got the feed. If you're in a business of chickens, rearing chickens, you got feed from maybe Grandon Congole. So you have gone now to pay a 3,500. So what does it mean in transaction 2? It means that 3,500 will be a negative, isn't it? But kuja kuma payables, because in there, that 8,000, there was this component of 3,500. You will remove it from there. Meaning that now you no longer owe that person that amount that you have paid. But even the cash reduces, the trade payables also reduces. Does it make sense? Wilbrod?
Yes, coach.
Yes.
Very much.
Guys, this one, if you are not going to, if it comes, because she brings these things, if it comes and you come out and say, no, you didn't have time, you should not blame anyone at all.
But yourself.
So now we go to, that was transaction 2. We go to transaction 3. We also paint this because we are done with it. Recognized revenue of 8,200, of which 4,100 is collected in cash. So from the 8,200, 4,100 it was cash. Inangui, Yenz and Congole, it went and increased the receivables. Aye. So when we first, let me just, okay, see, 8,200. 8,200 is coming in as revenue this side. But with this revenue, we did not get everything in cash. Whoopee. So we paid how much, or we received how much from that? We received 4,100. Meaning that the other component is now part of Vava Javan Congole, who are our trade receivables. Trade receivables is what is owed to us by our customers, whereas trade payables is what we owe those that supply goods and services to us. So also the accounts receivables, this is what was recorded. It is the difference between revenues and cash, which is also 4,100. I should have changed this number because you think it's the same one here. It's not. Tamara, are you getting me? This is just a difference. Coincidentally, I should have changed that number name so that I don't confuse you. But since you're part of this class, you'll not get confused. Then we go to transaction 4.
So, sir, since we are putting it on receivables, will we also put it on, let me see. So on cash, okay. So we put it on cash, isn't it?
Yes, but like I've said, I just made the mistake in coming up with 8,200 where 4,100 is cash. Because then you are getting confused of this amount. This amount is that revenue afterwards. Let me give this example. Let me go radio 1. Let me go radio 1. Mugulisa nkuku. So, wagulisa zili 10 nkuku. Ni 50 kwacha each. So, zili 10 in 500 kwacha. Vutomvera. Hello? Tamara abwera kuli imwe kunyumba kuli ba the Ryokos mukamba business nkuku. Tamara comes and says, "Wupe we ine yakosa kunyumba but nipase kochani, nipase konkuku zili 10. I'll give you 250. I 250 ya sala. Nzaka kupasa next month. So you get all those nkuku zili 10, which is 500 kwacha. So the 500 kwacha comes and sits here under revenues. Because in any case, the income statements, they follow a concept, an accounting concept called matching concept or accruals concept, that expenses incurred must be matched against, or revenues must be matched against expenses incurred in earning it. So you have recorded the 500, but you have also come here to record cash ya 250. Kali Tamara kupasa 250. But Tamara owes you a 250 again, which comes here as accounts receivable. Mulamu, have you heard? Can you understand that vernacular?
This guy, you need to get feedback from the.
You're on the background. There's a good disturb by choke your pop.
Oh,
Most are choke.
at my right end.
Oh, you shall be the phone. So this is what it is. I hope you have understood. Now I'm back from Radio 1 to Katana Radio 4. Is it all right? So we now go to transaction number 4. So this one is done, guys. If you are very particular with what we are doing, it's every transaction is giving you 2 results. Aye. But Dongo used to call me every day, every week. Now we started and he's not there. I feel very bad for him. Let's move on.
I think we're
So we move on. We go to transaction number 4. So transaction number 4, it says purchased additional equipment for 1,800, paying 500 in cash and the balance account. So cash, it will reduce by what? By 500.
So payables will be less 500.
Cash. We are paying cash. So, and it will not go to payables. So, purchase additional equipment for 1,800, paying 500 in cash and the balance on account. So they paid 500.
So 1,300.
Right? So the 500 was paid, but the equipment, it increased by what? Is it 1,800?
Yes.
By 1,800. So the one that actually remains, because here you're actually spending a 500 there, then the difference would come here under payables. But strictly in accounting, okay, this will be your trade payables. So the difference would be how much you're paying a 500.
1-3.
1-3, isn't it? Okay. Maona mwacha manje. Then you go to transaction number 5. It says paid salaries 1,650, rent for November 720. So we say paid salaries 1,650, rent 720, advertising 450. Tamara, just aggregate that, because that was cash already, isn't it? The moment you hear paid, don't even start thinking whether in Pangongol or what. Paid is cash, isn't it? So just
Yes.
aggregate. How much is it? Jesse, you won't get it wrong.
Coach.
How much is it? 1,650 plus 720 plus 450.
2,820.
Okay, I hope this is correct. So paid cash, meaning it's coming from this, which is 2,800, eh? 2,820.
Yes, coach.
Then where else does it go to? It goes to expenses, huh?
Yes.
So my expenses, guys, it should be negative like that. So we're going to transaction number 6. We're almost there. Withdrew 1,400 in cash for personal use. How do we treat this, Jason? Transaction number.
It's going to drawings.
And where else? Is double entry. So which two accounts will be affected?
Cash and drawing. Cash and drawing.
Okay, you were almost losing confidence. So,
No.
so withdrew minus 1,400. Then drawings here, it comes there and it goes like this. We go to transaction number 7. Guys, a loan note, when you hear you're in meetings and someone says, how much was your note facility? It is a loan. Don't get confused. Do not go and embarrass the academy. So now we go to this. Received 3,170 from Zanaco Bank. Money borrowed on a not payable. Let me go read your one. Ukatenga loan, vama kupasa cash, isn't it, Tamara?
Yes.
So the cash account will increase. But whereas the loan account as well is enda pamwamba, because you show now that you have a loan of 3,170. 3,170, it will come there. But even here, under the loan note, you have 3,170. Transaction number 8, incurred utility expenses for month on account of 450, supposed to be 450. As long as they don't show cash or they don't use the term paid, meaning that these things were gotten on credit. Incurred utility expenses for the month of whatever on. Okay, yeah, I confused the whole thing, guys. Let's say it right, folks. Incurred utility expenses in November for 450 kwacha. So, Kuma expenses, we have no problem. Expenses, it will go here negative 450. All expenses, you put them in negatives. Then you come this side, guys. You are not going to, it's not going to affect cash because there was no term word used as paid. So it was in Congole. So you come here under payables, and this is where you're going to put that, like this. Kwamana. We do like a balance sheet, income statement. And what is so strange about all those who are giving advices, no, we should just see 2 hours is too much. Just take about 1 hour, or 25 minutes. I don't know, it was 15 minutes, they are not here. Mr. Jitongo started this, also is not here. So in life, the lesson that you should learn that all those who will tell you what you are supposed to do, they will give you confidence. When you're in problems, they will not be where? They will not be around. Let's move on. So sometimes we will even just waste a lot of energy trying to defend our positions when they will not be around. So let's move on. That's lesson. Look at all those who are writing things today. None of them is here, which is very good. Like this is okay. Now, guys, after you're done with this, all the data now you'll be getting it from here nicely. So now this is A. In your exam, I think it's like a 5 marks. So we go to B. Under B, I think we start with B1. B1 was what? It was on prepare an income statement. This is B basically. Prepare an income statement. So we start with the income statement. Very easy. So we'll say Tamara income statement. There's nothing like Java accountants for the year ending, whatever, we leave it for the accountants to do that. So Tamara's here, we start with sales, or what you call revenue. So sales, or which is revenue, which is this 882. Then now we go to the expenses. So you saw under expenses, apparently, I think that would not be maybe advisable. We just took it down there.
327.
Which is 327, but we can segment it nicely to show the types of expenses. Otherwise, to look like you haven't done anything. And just cut it here. Since you know that the total would be that. I'll do like this, and the expenses will line up all the expenses so that can come tick. You had what? Organized revenue, additional equipment. No, that's not an expense. Salaries, put it in your mind, salaries, rent, and advertising. So that's salaries. This is how you should show it, at least can correct vision. Rent, advertising. What else was there? Utility. For utilities. So how much was salary? Guys, salary is 1650. 1650. Rent?
Rent 720. 720.
720. Advertising?
450.
450. Utilities?
450.
450 again.
Yes.
So do this. It should give us that same number that we have in the tabular thing. So say equals sum. Because we want to get this 5 marks, so we don't want to solve it. So we'll say now net income, which is 8,200 minus 32 whatever, but we have to make sure to check whether Niamen is it balancing with this number that you have here. It's okay, you have seen it? 3270. This number here.
Coach, you got which one? 82?
82 is revenue.
Okay. I've seen.
Okay,
so we still have it on top there on tab. Just go up a bit. Yes, on there. Just go up. Oh, okay.
It's, under revenues. It's coming from here. Because all this part here, from here up to expenses, it sits under owner's equity. So when you look at the balance sheet, it comes as equity. So in short, this one I should have balanced it up so that yankalako pakati, otherwise you'll get confused. Should sit like this. So guys, you have done the income statement. We go to B2. I don't know what B2 is asking. What are they asking?
Prepare an income statement, and owner's equity statement, balance sheet, and
so
a cash
owner's
flow.
equity statement, guys. This is the portion here, from here, from here, like I'd already explained, from here up to there.
Oh, okay.
So we'll start with capital, which is owner's equity, which is capital. This is owner's equity statement. That's what they're calling it. Statement, that's what they call it. Once a man says a report dollar, so you start with your capital. So your capital in this case, isn't it? This one, 7,700, which is owner's capital. Maybe we call it right. Let's say it right, folks. So on top, sorry. Let me do this. I cut. So what you start with? You start with assets. And we catch a mush. Let me put it here. So here I'll call it assets. So you have owner's equity. What else is following there? Owner's drawings. So owner's drawings, guys, which is this component, is reducing your capital because you have decided to use it for you have decided to use the money that you had invested in the company for your own use, personal use. So it reduces your capital. Then what is this side is revenue. So here under revenue, guys, you look at the net income down there. It's the same thing. Net income. You come here, you pick it from there. Done. This is on your assets. From your assets now, you come to your equity, then just close it. So, oh, sorry. I thought I was doing the balance sheet. Remove this. This is your owner's equity. We are done. B3 is what? It's the balance sheet, eh?
Yes.
Sorry. So, balance sheet. So under balance sheet, guys, we'll have assets. So under assets, we'll start with cash. How much was cash? So I'll come this side, sorry. I'll pick it from here. Cash, there. Cut, bring it here, cash. Other than cash, we have the trade receivables. I don't know what we are calling them here. First, supplies. Supplies, guys, is more or less like inventory. It's basically inventory. Supplies. What else under assets? Receivables. Trade receivables. So on receivables, you have this. Just you have other assets. The 7.3 equipment. So equipment, guys, was 7.3. We're almost there. So we're done with the assets. It just needs to balance. Then now you come to under assets, you look at equity and liability. So under this, guys, you have owner's equity. Owner's equity. Which you get from your statement there. Other than owner's equity, guys, you have from your owner's equity, you have trade payables. I don't know if they're being called trade payables, account payables. It's okay. Or they're calling them accounts payables in this. You pick. You have not payables, meaning these are long term, which is 37, comma. Let it balance. If it doesn't give us 2650, then we are in problems. Done with the balance sheet. Any questions up to the balance sheet? The cash flow to be like a small thing, just small thing. Tamara, is it okay?
Still trying to catch up with you.
Remember, it's these things, guys. All we are doing on the balance sheet was first we found the assets. All these numbers in here, we were actually picking the totals, fancy up. Then we came to owner's equity, the statement. If you checked again, we picked this. If we add fancy, we pick them like this. This is the difference of your net income, revenues minus expenses. So we picked from here. From here, you check 11,230. That was your owner's equity statement. This one. Then now went to the balance sheet where we are saying the assets and the VDPANS are balance. So it's the same numbers if you check. Tamara.
Yes, coach.
Then now we go to the small cash flow statement. I don't know where I'm going to put it. I don't know. Okay, maybe. Because I don't know how to write for. Okay, I'm sure that's what it is. So here we have the cash flow statement. So the cash flow, we'll look at just the operating activities. There's the operating activities, investing and financing per manner. So we'll say operating activities, just a simple one. You don't need to put them in a manner that International Accounting Standard 7 prescribes. Just a simple cash flow that you are showing. So here we'll show the operating activities, then we'll show the financing activities. A simple one, just like a cash flow, a simple. Then we'll show, the investing activities. What are we investing in? Like a simple one. So under operating activities, these things that you're getting from your income. So to be your net income here, basically your net income. So I'll do like this, I'll say net income. So even if you don't put operating activities, for this purpose, guys, maybe I shouldn't confuse you. Let's not put them in that way. Let's just say the net income. But again, even on net income, all you're interested in, guys, are those activities that were giving you cash. So like in this case, under the cash flow statement, if you check this side, you can say net income. Then you look at Congoles. So you can bring in your net income. But under this net income, there are certain things that we'll need to remove or have to remove. We'll have to only remove because here under the net income, what we look at, we'll have to remove certain elements that are not cash related. So when you look at this thing, you only look at the things that had a cash movement. If I wanted, I could just look at all these. I would say cash sales, maybe just remove this part, sorry, because I don't want to confuse you. All you're interested in are those that had cash sales. You show cash sales. How much was your cash sales? Just check on your question. The one that had the cash. If you come here, it was 4,100. That is what we are showing. In the cash flow statement, it's about cash. So cash sales of 4,100. Then from there, what did you have? Collected what on the receivables. So you have accounts receivable. You collected this. So I'll say cash on receivables. Just a very simple thing. So cash on receivables was how much? Was minus that was 125. Then you also had to make, I can see you had to make, to pay. You paid suppliers of this cash. So say paid suppliers. So the suppliers, you paid suppliers of this 3,500. This is what you paid. It's a cash movement. So all you are doing from here, we are only interested in cash movements. Ignore this. This is what is going to reconcile, so that once you are done, it should give you that 72275. So you know that here there was no cash. Here you only had this. This was your cash. Here you only had this as your cash. That is why it's coming that side. So if you check, we have taken care of 125. We have taken care of 3,500. Did we? Yes, we did. We have taken care of 4,100, which is coming as cash receipts. There's a 500. What is this 500? It's on the equipment. So equipment. So under equipment, Tamara, under equipment, you look at the cash, only cash movements, please.
Okay.
So I'll show you the trick in the way you should master this. So we come to, I'll check it from here. So those equipment. So the one that is guiding us is this whole thing, this thing here. So you are picking them from here, but you are listing them according to the activities that they were. So you had 1,125, you had 3,500, 4,1, which you have put, 500, which you have put. This 2,820, what was it? Wasn't it my expenses?
This, which what?
This one. It was on transaction 5.
2,820. 2,820 was a combination of expenses.
It was basically this.
Yes.
Minus utilities. So we can put it there just to show, because this becomes your thing. So you had the salaries. You had this. Up to advertising, giving 2820. Then you also had your utilities. For the utilities, this is where we are doing the 450. isn't it? The 1.4, where is it coming from?
Withdrew 1.4 for in cash for personal use.
Okay. So these were but we also had drawings, which was 1.4. So I'll show you the easiest way of looking at these things. So now, this is what you had, but please wait. So here, this is what you're going to call as a cash increase. If it's an increase, then you look at the opening balance. The opening balance of cash was how much?
7. How much was that? 7.
No. Or 7.1?
Yeah, 7.1.
So we'll see there could be certain things that we haven't taken care of. There's one thing that we haven't taken care of. You know what? This 3,170. What was this? Transaction number 7. What was that?
Zanaco Bank not paid.
Wow. How do we forget that? So let me just insert. So shift downwards. At Zanaco loan, yeah?
Yes.
So Zanaco loan of 3 whatever. This one here, 3,170. Power's gone. So it's giving us how much is the cash? So here, why is it not balancing? Because then closing balance, this is where now you need to understand and balance it nicely. We didn't get the numbers nicely. Closing balance, guys, would be the cash increase plus the opening balance, right? 13 whatever, which is wrong. So here you do a control, you say this minus that, minus this, because we need to get that. So when you check from this side, there are numbers that should have been negatives, we put them as positives. Which ones? Is a 4.1 positive? These salaries, Tamara, you couldn't even advise. Salary is a cash outflow. It's a negative. Rent we are spending is a negative. Advertising we are spending is a negative. Utilities we are spending is a negative. What else? There's a 450 that we haven't taken care of nicely. The difference is 450. Which one? Did I put so many 450s? And breaking this down. Oh, there was one on utilities.
Yes.
On utilities, we did not spend anything. Remember? Hello?
It's on account, so yes,
there was no cash. Yeah, there was no cash movement. So what secret is this? How do you do your cash flow? Your cash flow, you know what you do? You just do it without thinking first. All you do, you pick for these transactions, per cash, you pick them. Then now you start putting the descriptions kumbali. You pick them like this. If there are those that you need to expand, you can expand them. Then you just bring them up without thinking. Then now you start putting my descriptions, no feature arrange mush. Then down here, this is where now you bring in your closing balance, your opening balance. Then you're done. So if you check all these numbers that we have here, all these numbers, they are actually in the cash column, right?
Yes.
Mm-hmm. So, guys, we are done on this one. Let me just go back to your Sarah's question. You do this tonight or tomorrow morning. Even when you're at the office, just sit and do it. You'll see Kuma invested cash to start their repair shop, purchase equipment, paid cash for mail, office, whatever. This thing within 30, 40 minutes, you'll be done. I want you to have the confidence that you can do the tabular, you can do your profit and loss, which you have done, the balance sheet and the cash flow statement. So that at least your 20 marks, you put it somewhere else. So that next time we can do time series, we can look at all these other things.
Okay.
Mm-hmm. So thank you so much. And surprisingly so, you have been very attentive, and it was a nice group. Mm-hmm. So we can meet tomorrow. You can rest, so that I want to see you do this question. You can send, Whoop, a promise that you're going to send what you're going to do on that question. Hello?
Whoopee.
Ryoko.
I think she's up there.
Okay, but I can see her here. So Tamara, you send, so that you just, at least you have seen that this question is not a problem. Allow yourself to make some few errors, then I can correct them with you. Wanvela Jesse.
Coach. Yes, sir. Where's the question paper?
Never my question very much it. Never made my own match it. I'll send that your whole thing.
Please, Coach, yes, post it.
Okay, I'll send it to the team that are here. So that tomorrow you can do that. Then Mazuro, you can just show me. Not that it's not mandatory. So only those that want to master this question, so that once it comes, you get your 20 marks and you move on to other things.
Zona coach. Semama 90. Weight marking out of 90. Yeah, sure.
Yeah, so you need to do that. So see you guys, and thank you so much. Much love.
Thank you, Coach. Good night, everyone.
Good night. Bye.
Thank you, Coach. Good night.